Hello, everyone, and welcome to today's No FOMO Charts Stocks and Crypto TA live stream. This is a live stream where I go over charts for swing trading and investing education. Today is August 27th, 2023. It's about 8 o'clock p.m. Eastern Standard Time. This week in the USA, we have stock earnings season is continuing. Best Buy, HP, Salesforce, Dell, Broadcom, Dollar General, and more companies reporting earnings this week, including smaller companies like NEO and Five Below. Also, on the economic data releases, we have this week preliminary GDP, core PCE price index, which these are the two metrics, including unemployment rate as well, job openings as well, that is influencing the FOMC with their interest rate hike decisions. So this is kind of a big week for the data. This is a kind of a newer data point that I don't really show on the stream that much, but the S&P CS Composite, this is the home price index. So that's giving us a little bit more insight into the real estate market, what's going on there in the USA. Yes, stock market earnings is continuing. Last Friday, we had the FOMC Jackson Hole Symposium meeting, and the Federal Reserve Chairman, Jerome Powell, basically reiterated and said, again, that the FOMC is committed to bringing inflation, core inflation, back down to 2%, and they're going to do that by raising interest rates more this year. So the interest rate hikes are not done. Just taking a temporary pause as they analyze the data month to month. So why is this data up here important? Is because this is the data they are looking at to determine over time when will inflation be stopping to the point where it hits their target, and then they could roll back and start to stop raising interest rates. So it does matter. Other news, Rite Aid, medical drug stores here in the USA, they're preparing to file for bankruptcy, unfortunately. In the crypto world, this is interesting. There's a new US crypto tax proposal that could give the crypto industry its own personal tax form, and that excludes Bitcoin miners. So that's very interesting. Right now, it's all consolidated into one form, but if there's going to be a crypto tax form, when traders, profitable traders pay their taxes, that's different. That's actually, it's good and bad, but it provides more clarity. And Visa and MasterCard, they're beginning to reduce their partnerships with Binance, specifically the Binance credit cards in Europe, Latin America, etc. They are canceling those cards or removing the option to have those cards at least. So let's start off with stocks. S&P 500 index on the daily. If you have a request, just let me know in the live chats. Today, I'm going to do a shorter stream today, so just let me know. Now, S&P 500 on the daily, what we do want to watch out for is, I'm interpreting this two ways. Now, it depends on how somebody draws this lower trend line down here. If they use the wicks, then it's anywhere near the ending of that trend line. However, if you use candle body closes and do a shorter term time frame support trend line, you can see we downtrended and we're back testing this resistance. What we want to watch out for on the bearish scenario, if there's a head and shoulders pattern and this breaks neckline support, we are in for more potential downside moves. That would be about 6% to the downside if that is really completed over time. So it could drop us down to 4,088. However, we're still in the support neckline is 4333. I'll just leave that there. The resistance above is 4439 and second resistance 4600. So I just leave these four lines here. These are the support areas. I want to watch out for that head and shoulders to see if that's actually really going to actually complete pattern and go down to 4223 down here, 4223. If not, we're still in the golden cross and it can just rebound from and go up here, right? Because if we're on a weekly, and we're starting to see this is the first week we have a little inside bar here on the green. If we don't crash back down, maybe we'll stop here on this weekly 20 line, 20 EMA, and see if we can establish a weekly lower high. Also depends on the data. QQQ, NASDAQ, starting with the daily, you can see we had this downtrend. Short-term EMAs down crossed. We had a lower high rally attempt. In this case, I would just draw a series of trend lines on the top side. And until we break either of these trend lines on the upside, it's still in a short-term downtrend consolidation type of descending type of wedge. It's not a rising wedge, right? This could be a consolidation, however. It can be interpreted two ways because long-term, it's still golden cross bullish, although this is a lagging indicator. High, low, stair-step pattern, except if we do not break out of here, let's say in September, next couple weeks, next month, and this is a significant resistance area, then the bearish head and shoulders pattern could play out with the left shoulder head, potential right shoulder breaking this dotted neckline, and more downside pain in the market trend. So that could be up to, I'll use a smaller conservative number, 7% to the downside, which brings us straight down to the 200 EMA on the daily. It's not impossible to get down there. This 100 EMA as well. So it's 351 or 331 are the two levels to the downside. So I'm very closely watching 358 support and 368 resistance. On the weekly, we do see we were due for some consolidation here. High, low, high, low, high, low, high, low. Are we going to get a lower high and go down? Or are we going to higher low this, maybe down to 345 area, or even where we bounced off 357? This, by the way, this dip is, if we're looking on the shorter term time frames here in the vertical pink, that can be an oversold bounce off of like a 5-minute or 15 oversold RSI. So that this is not the true bottom of whatever this move is doing. Although one could argue it's at support right now. So the trend right now for a lot of what we're going to look at today is we pulled back down, but we're in the support zone. So this is why some dip buyers, the hardcore dip buyers, are saying this is the dip, buy the dip, buy the dip. And it could be true. Like I said, if we rewind in history in the pandemic, there were plenty of large pullbacks. So one was here, there's another one basically here, and here as well, So just measuring those. 6%, 12%, 10%, right? So that's already what, a 14% average, 12% average, 10% average, somewhere around there, right? So this pullback that we just had, we went about almost 8-9% to the downside. So that's why once we get those types of pullbacks, is the uptrend over? No, it's not over. It's not over, but we want to really watch out for the head and shoulders pattern. Okay, so this is kind of like, reminds me of Netflix chart. If this support on these underlying blue does not hold, then we're in trouble, or the market's in trouble. Now, Dow Jones ETF, you can see definitely holding the support down here in this type of channel, parallel channel. I'll underline the support levels, resistance levels on top. And that's why I try to recommend people not to have FOMO at these top sides. Breakouts, I am not really a breakout trader unless there's a very, very strong reason for that, because this happens all the time, is we hit the resistance and there's not, and the X's up here, and there's not enough good bullish news or buyers to come into the market. And therefore, it's going to pull back. This is a large pullback. 4% on an index is very large. So the question is will this blue circle, this support, will it hold yes or no for the next 30 trading days? 20 trading days, 30 trading days. That's all that matters. Because in the past, we had the exact same scenario basically happen. And I need to see this gap up, bullish engulfing breakout. I need to see this exact June 2023 to July, this giant higher low action happen. We need that to happen within 1 or 2 weeks if somebody's a bull. Now, if somebody's a bear, they don't care about that. They want this thing to crash, the bear scenario. They want to keep crashing, weak attempt at the rebound, and then crash. And then shorts are definitely, that would actually create a head and shoulders pattern. That's what I'm talking about on these 3 charts. On the weekly, I'm not seeing any hammer candles or morning star patterns. That's why it's still in progress, still in process right now, the consolidation. Let's go to IWM. IWM, we had that fake breakout. Again, this is why sometimes I don't play these breakouts here. And I like to play support plays on the bottom. And I remember calling this support play out for multiple weeks in this circle here, holding this trend line support. And if it goes up, I mean, that was 15% profit, pulling back down to a intermediate support level. However, if it doesn't break out and continue to upside, you can see it has a lot of open space down to fall into this triangle. This is a weekly chart, by the way. So just want to watch out for that. Do want to point out, quick rewind. On S&P 500, we can see the MACD down here. It's not super oversold, but if somebody's really trying to get into something, there's some H4 MACD momentum that's starting to build here on some of these charts. It's not 100% ready to go yet, but it's probably like halfway or 60% ready to go. Because once we have the MACD momentum, sometimes there's a turnaround, right? It sort of looks like this right now in this X over here. The price action with the MACD, right? So it's kind of just floating around, going sideways, and then there's a little bit of momentum before it bottoms out and goes back up. But we're not extremely oversold yet. So if somebody wants recent price action comparison, there it is. Okay, let me check the requests. All right, I'm not seeing any. So let's go ahead and just quickly move over to gold and silver and copper as well. So with gold, you can see it's the same problem. We had this lower low, lower high, lower low, and now we're just bouncing up below the trend line. However, there is MACD momentum. So this actually might try to pierce. The bulls this is their last chance to kind of save this right here because there was a double bottom. If you switch over to weekly, was some kind of psychological double bottom here. And I'm going to see if 178.54 breaks this week or not to the upside. Because this is exactly sort of like what happened with Bitcoin. Slanted head and shoulders on the weekly, slanted neckline. If we don't recover from this, this is game over, bad news for gold. Watch out for that. Silver's a little bit healthier because there was this double bottom support that I marked here on the weekly last week. This is why technical analysis can't help. Instead of just looking at at watch lists like this on the side, is because I'm seeing the supply and demand levels, right? Supply level, demand level. Also, you could draw a parallel channel, basically draw a parallel channel, and that's what I'm saying. Hardcore dip buyers, they know buy this, right? You short the resistance, you buy the support. Not 100% of the time, but there's a higher chance of reversing when you hit the double bottom or triple bottom here, support, rather than trying to buy this breakout on this last day. That's why I'm anti-FOMO. I'm no FOMO. I learned that so many times by studying charts and by personal experience and also by practice, real money and fake money, paper trading, is that right here, you're at the resistance. And then at the shorter term time frames, right? Look at how overbought this is over here. It's like 86 overbought and it's not going higher, right? And then it starts to downtrend on this, on an hourly over here in the price. So that's how we know there's a problem there. Okay. So that's why just learning from experience, I identify it, I see, oh, there's like a triple, there's a head upside down head and shoulders, or the V-shaped recovery, or there's a double bottom support. And so that's how we know how to enter into trades with a higher percent chance of winning. Now, if this turns into a W double bottom, now that's why I marked this resistance here at 23.15, has to actually reach there first, hit the top of the channel and try to keep going. It might not do that, however. It might not. You pull up a volume profile. Yeah, that's why. There's a lot of trading resistance here at 23. There's not much volume when it gets to about 24, which is the all-time high of this year. Let's just watch out for that. Copper, this week I'm using the actual copper ETF. So this is the real price in the US copper ETF. Now, on the daily, it's very similar. First draw trend line. There's a newer trend line as well. On the bottom side, it's just writing that. That's all it's doing. And we can see here, still in a large symmetrical triangle, I'm going to draw a large extended trend line and basically consolidating, but it's still good in that it's symmetrical triangle, but it's over time, every couple of months, every quarter, it's making a higher low in the support. Does that make sense? It was a lower low here, but this is a higher low. So at least for 2023, starting to tighten up, going sideways. In the past 3 months, at least we have higher low price action, meaning it's just barely trying to step up, inch up here. We do have MACD histogram on the daily. This takes out some time to play out. Last time there's a MACD histogram. Sometimes it doesn't work, like this example fails, but you can see here we had a turnaround with oversold conditions. Do we have that now? No, that's why. RSI is neutral in about the 46 level. So I wouldn't put too much credence into this MACD down here. However, on the H4, there was that 1 day of weakness on August 16th. This is what I like. These oversold. It's coming down here. You actually hit this double bottom zone in the blue. Double bottom zone on an oversold with MACD histogram building bullish. That's an auto buy. If I was swing trading this, that's an auto buy for me. Just put some on. Put some risk on. Not a crazy amount, but it was only a 1.5% stop loss, and there's a 3% gain there. Well, now it's 2%. Still, if someone put a 1% stop loss, still 2-to-1 play, right? Just at least making something. So, but in terms of is it at the bottom of support? No. If I'm very strict, I will want this price to come down to this dotted yellow trend line down here, maybe in the 2261 area, or even the 2190 area. Because if I use a Fibonacci and we go from the bottom of this crash backwards to the resistance area, you can see it's hovering right around that 618 in the past. That's why it's getting stuck right there. So it's either the two targets is 2470 on the bullish side, or on the downside, it's 2141. And there's all these intermediate ones. But I want to watch out for that. Weekly as well, kind of inching up. This really reminds me of XLF ETF. Just trying to flip it around. Right before it goes up, it's kind of hesitating down there after some kind of market crash. So if you rewind, it's sort of similar. Actually reminds me of XLRE a little bit more, right? This is a real estate ETF, and somehow it's related to, and it looks very similar to copper. So there are some correlations, not direct, but just natural market movements. It's like the ocean tides, right? It's moving in and moving out. Quickly look at US oil. US oil on the weekly, we hit this hanging man candle here on this weekly, watching out for the $75 level. If this pulls back, you can kind of see it pull back to a support level about here, 68.51. That's where the gap is. I'll leave that for next time. That could be our $68 support level. And the daily, it's the same problem. We're in an uptrend for now. Short-term uptrend, golden cross, but right here on this big blue, that's the $68 is the 200 EMA. So that could be the level of support. Has to break above $75 to really go up. Natural gas, same deal. This is why I love the gaps indicator. If you're a TradingView user, you have an account, you could just add this on your indicators. It's free. And I just changed the color to something really bright so that's not green and red so I can see it. And now you can see all these hidden levels of support, especially on stocks and ETFs that have a lot of gaps. Forex and crypto do not have gaps because they're basically 24/7. There's only gaps if there's some kind of like level 2 extreme market volatility, like, huge swings up or down. It's rare, but stocks, you see, it has these gaps all the time. So when it hits this gap on the bottom, bull traders know that's dip, oversold condition with a gap, support level, that's a buy. And with reasonable risk, right, that's already 4-to-1 play or 2-to-1 play. So the resistance above $7 or 721 and support level below 655. See if that's going to hold down there. Okay. It's going sideways, and zooming out, it's actually pretty low. And that's what I'm saying. This might be the giant upside down head and shoulders that we've been waiting for 1 year straight. So if it is, just in case, it could go 30% to the upside. And that would be where my blue X is, 952. Okay. If it comes down to $6 down here, that's a problem. We're in trouble. So it has to break out or do something out of this blue box here. It has to do something. And I would like to get in cheaper than waiting to do the breakout, right? Because if you buy cheaper, there is less risk. But this is not a good example to show that because natural gas is not about technicals. All right, let's quickly look at rapid fire, look at some other countries. And because I always like to keep an eye out on what's going on some of the global indexes. And there's been news about China as well. This is what I'm saying, right? China falling out of the symmetrical triangle, this could be bad. 15% to the downside is the target. Somewhere around, let me measure that one more time. 50%, 1.5 would be about 9,100. So just want to watch out for that. Broke out of here. Oh, that's not good. Lower low. And if this could oversold at any point and bounce, but if it keeps downtrending, that's not good. Nikkei 225 is looking like the S&P 500. We had this huge breakout in this ascending wedge, ascending triangle type of formation, and consolidating right now. Yes, we're in a golden cross uptrend. That's why I marked it's still bullish, but it's pulling back right now. And that's why I marked the 31,000 and the 30,000 level here. So if it doesn't bounce up within, let's say, 3 months and break out of there on the price, then it could hit this bottom. And that's actually normal because it has not retested the 29,000 level for a couple of months now. Hang Seng Index, it's actually death crossed. I should go back to China and show that it's death crossed as well. That's why it's going down. EMAs are death crossed to the downside. Hang Seng Index is death crossed, but we're at the support level. And this is the 618 area, actually. So the market here is going to try to fight a little bit at this price, the 17,500 range, right? You can see I'm underlining the support levels. This is the third time it hit this level, basically. These are the resistances on top. So if this support does not hold, it could crash all the way down to 16,462 down here in the X, or it could bounce up to the 50% retrace, which is about 18,800. But keep in mind that it's death crossed right now. It's death crossed from May 2023. You want to watch out for that. Euronext, this is just the Euronext 100 index. It's not perfect, but you can see it's golden cross, but we're hitting the support. We're right at this level of support, consolidating, going sideways right now. So if this doesn't break out and continue going up, it's related to the economy too. I've been reading a lot of workforces are going on strike this year in various countries. Some has worked, some has not. So that's why the economy is kind of stagnating. You're hearing that word stagflation coming up again. Sticky inflation, meaning that the problem is not going to get fixed in 2 weeks. It could take another year, maybe another 2 years, right? So to really go back to normal. So we're going to have to see. what happens with this channel. Let me do UK 100 specifically. UK 100 unfortunately did death cross on the EMAs in August 2023, and that explains why there's such a strong move to the downside. However, we're in a descending wedge, but it's that support, double bottom support. That's where we're bouncing right now off of this level of 7,235. Now, what can happen is sometimes the shorts, if you've practiced or if you've been in the market long enough, you know low, high, lower, high, excuse me, lower, low, lower, high, lower, low, lower, high. And if it doesn't break out, it could be another lower low. The shorts know this is the resistance. They can attack that back down if they really wanted to. However, if the shorts are going to give up here and this is just somebody closing their large short position, then they could turn into a higher low, the bullish case, off the 7283 level and then target back up reversion mean to 7500. So I want to watch these two levels very closely. Okay, India in the sense X, it's still in this uptrend, but we just got rejected down from that topside resistance. Okay, so if I draw the resistance here on top, now you see what is very clear what's going on here. High, low, high. If it does not break out above 67,512, then we could pull back all the way down to 200 EMA or lower, and the market can still recover. This is just natural up and down dynamics, the ocean tides type of mentality, the waves. Also, speaking of waves, if we've had Elliott wave, right? 1, 2, 3, 4, 5, that's it. It's supposed to be done. And now, if you believe in ABC correction, Elliott wave theory, are we going to have our A? Where's our B? Maybe this is our very weak B, and we might have a C type of correction, which reset the market. So that's true, and it could apply to almost every major index that we're looking at. TSX, Toronto Stock Exchange, this is consolidation, almost looks like robots in a way. In terms of algorithmic trading, in terms of these robots programmed that whenever it hits basically buy the support, sell resistance 3 times in a row. Those were 3 algorithmic easy trades if somebody's using algorithms. Now we're at the 4th time we're here. So if we closely look at this price action, okay, it's going to either hold here and not go down, or double bottom and go back up, or we have upside down head and shoulders here, higher low pattern. So it's building right now. One of these 3 patterns is going to copy paste repeat here, or worst case crash. So just want to watch out for that, the economic data that's coming out. TASI. Now this is interesting. There, right here, is in a golden up cross, riding that 200 EMA. It has to break above this level up here. Where's here? 11,932. Okay, and the support level 11,196. So you could just box it in like this. Either the price needs to bounce up and continue up in this uptrend, or it's going to crash. Because where's the lower high? And we need to not be fooled on lower highs, meaning if it just bounces and somebody gets really excited about that and they enter the market with no stop loss and it crashes on them, that's how people get hurt in the market. Germany DAX, same thing. Just like Europe it's kind of starting to flatline and go, not in a bad way, but it's starting to consolidate sideways. So in terms of growth, that's not good. Growth, we need up, not sideways. And XJO Australia index here, very similar. Just need to hold on to this and watch for the higher low here, 70.70 for the support levels. And sometimes, that's why nobody really knows 100%. Are we going up or going down? Because we're using technical analysis to, if it's greater than 50, 60%, I might enter a trade. So let's just pretend, where's the stop loss here? The conservative stop loss only 1% away. Now, if you go deeper, okay, the next level is 2% or even 3%, which is getting kind of large for large size accounts. But 1.5% or 2%, stop loss with a potential 4% target, which is the top. And then how long does it take to get there? 31 days. So in 30 days, we're gonna see, are we rebounding up, or are we gonna crash down on this thing? That's swing trading in a nutshell. Using the charts, using the news over here, right? Using the financials. But this is not a stock, so you don't see the financials here, but you get what I'm saying. All right, let's move on here. Let me check. There are no requests here. And again, like I said, before we move on to crypto, it's been a pretty bad month. It's been pretty bad for 30 days. If I'm just honest, if we think about what happened around the world, is we had hurricanes, floods, fires, heat wave, global warming problems, climate change, political problems, political unrest, natural disasters, multiple sectors of the economy going on strike, people suing each other, businesses suing each other, right? Market pulls back naturally, and then we get this crypto pullback. So welcome everyone to my stream. I'm streaming live on TradingView, YouTube, Twitch. We have a Twitter X group. This is now the cryptocurrency section. If you have a request, just let me know in the live chat before I sign off. TOTAL, what is going on here? Let's start over. On the daily, right now, the total market cap of the cryptocurrency space market is consolidating right now. We were in an uptrend for the beginning half of 2023, but now it's going sideways. And sideways is weak for now. Does that make sense? Because if there is no SEC lawsuit, we should have blasted up on the past 2 months. We should have mooned price to go up. However, this is a lower high. This is not good. This is not good for bulls. Okay. Now, is it the end of the doomsday market? No, it's not. But did we lose a critical level of support? This trend line was lost. That's not good. This trend line was lost. Number 2. That's not good. And I'm trying to be as objective as possible, right? Because if this is really our lower low, this is a critical level that we lost because of SEC lawsuits, right? High, low, higher, high, higher, low, lower, high, higher, low. So in terms of the immediate price action, we are consolidating, and I'm being generous with this support trend line right here. If I was strict with it, we're under it right now, and that is not good. Also, there's a potential, like I said last week, of the potential head and shoulders. Unfortunately, though, it's at the bottom of a downtrend, which is very not normal, but I'll leave that for next time. And in this case, the market could, a bad case, could crash down negative 22% if we do not rally. Okay, so just to warn people about that, we could crash back down to $800 billion market cap and $16,000 Bitcoin if we do not go up for the next 3 months. Does that make sense? So we have to, this support has to hold. We can't go lower. Let me switch over to Bitcoin now. We can't really go lower. We're looking at Bitcoin chart now. And keep in mind for perspective, this is the bottom or the midpoint of that downtrend, right? If we use the pandemic, we hit the 618. Okay, so it makes sense why the price is hesitating here. We hit the 618 bounce. That's just mathematics. And now it's pulling back. So we cannot go below Bitcoin 25,000, especially 20,000. We cannot lose 20,000. That'll just be devastating blow to the market. Now you might have just saw that peak of, wait a second, it's oversold, really oversold here on the bottom. That's true. That is true. However, if I mark that spot on the charts, and let's use some just basic analysis here, every time it gets to that level, is it really the bottom of the market? If you look at it, no way. This is not the bottom of the market. Neither are these, right? So I know from experience that sometimes it's like dropping a ball, throwing a ball down a bunch of stairs. is it's going to keep bouncing. It's going to hit the one stair, bounce up a little bit, but keep falling. So if this does not recover, we're in not good shape. If you're a Bitcoin bull, if you're a crypto bull, this is not what we want to see right now, right? So it's going sideways. And now I would recommend, just for anybody, if you have a TradingView account, you just set alerts. Set alerts here. Instead of drawing with a line, let's do it together right now. 25,000, Alt A. And then every time it hits 25,000, I want to know that. $25,000 Bitcoin price cross every time. And let's draw one here at 20,000 as well, Alt A. So I'm saying whenever Bitcoin price crosses the $20,000 level, every single time, forever, let me know. And that's because I have the paid premium account. $20,000 Bitcoin price cross. And just letting me know, right? So I don't have to stare at my phone all day long. Now, this is also true for up here. Where's our resistance close? 31,712. So Bitcoin 2023 resistance cross. Hopefully it gets back up there. And also you box it in, okay? So you can see we had the double top here, and now we're at this level going sideways consolidation. On the weekly, this is not looking that great, because if it happened to, you can even measure it here. There was a double top, and so that's bearish. If it's 20% to the downside, where's that? That's $21,000 Bitcoin. Now, somebody might say, wait, no FOMO charts. Wait, it's hovering right at the 200 EMA. Literally, this red line, can you see? Can you see the red line? Zooming in. It's right there, right above it, 26,000, 25,000. If the market was going to recover, we would see the exact blue circle. We need a Morningstar weekly. We need 1 week of just green. And the week just started about an hour ago in Asia market, crypto trading, Australia, Asia market. So this is what we need to see, the circle. We need to copy paste that into this area. We need to see a copy of that here. First off, we need to see for bulls, we need to see a hammer candle. We have a doji and then an actual little bit of a continuation possibly. So this might turn into a hammer, you never know. Or this could turn into bullish engulfing if the good news comes out, right? So that's why I'm watching very closely. And I sold off a lot of my crypto positions because I knew if we, right on this spot in the end of July, if we don't recover from that and go higher, then it's going to go down over time. And if we hit a lower low, we could hit a lower high, but a lower low. That's why. Just crypto market is quiet before it crashes. People are just kind of holding their breath, hoping that it's going to go up, hoping that it's going to go up. But if I don't see strong evidence on the chart that of some kind of setup for bulls, I'm out of there as a swing trader. I'm took my profit and I'll come back later. Now, if somebody's all cash, it's a different story. It's because I'm protecting my profits in principle rather than trying to maximize, every single chart setup or every single play. I don't really buy every single setup because sometimes it's not the bottom, right? This August 14th setup, this one failed. I didn't even buy this one. I knew I actually need to sell here because if it doesn't bounce up. Okay, so it just depends on your perspective. All right. Let's go on to Ethereum. I'll try to go a little faster here. Also, I want to remind people that when Coinbase got authorization for futures trading, like I said, futures trading does not always mean up. Futures means they can bet on the price going down as well. Remember, if you know your Bitcoin history, I'll just say it again for any new people here. If I take a Bitcoin chart, I know this because I study the charts. Rewind to December 2017. Oh, these are weekly. 2017 Bitcoin. Right here. What happened to December 2017? Futures trading of Bitcoin was approved and launched on Chicago Mercantile Exchange, CME, Exchange Chicago, on the exact day the futures were launched, that's the exact top of that market move. Okay, so that is not random. So having futures right now is, well, it's another tool for people to make Bitcoin potentially go down. Now, Ethereum USD, we lost the support level, and I said watch out for that. Now, the bigger support level, if you zoom out, at the bottom side, is somewhere in this 1400 range. That's why I have this gray alert, this blue alert here. Lost that. Now, low, high, low. It could bounce up, and that, day traders will rejoice for that. But long term, we might end up hitting this 1400 level. That's why I'm very interested there. If I Fibonacci as well, let's see where that level goes. 618 or 50% almost, basically 618 down here, 1400. So that's not a random number. That is mathematically, algorithmically calculated. I like Fibonacci. Usually in crypto, it helps. Now, let's go to Binance Coin. Binance Coin still struggling under here, under the large descending triangle. If we cannot go back up, and unfortunately for Binance, it's going to take probably months and years to restore all these legal battles. I do want to point out to people, if we use the pandemic low to pandemic high, and look at this number, we're not hitting the 618, $280. Where's the next level down? 162. Also go pull up pivots, and that's the S5 pivot. It has to crash down below all those orange lines, but it is oversold. I will give it that, but it's not extreme. I want to see extreme crashes like somewhere in June 2022. If somebody's really hunting for bargains, you want to see extreme low. Even if a Bollinger Band, right, it's going to poke out of there. It's poking out of there. There's something wrong. It's outside the 90% second deviation. If it's outside a third deviation, something's really wrong, right? And then if you study and practice enough, you know that once it comes out of third deviation or fourth deviation, then that's probably some kind of relative bottom on Bollinger Bands. Reverse is true too. When it's pumping up out of the third or fourth standard deviation, and how do I know this? Is there are right here. If you go into Bollinger Bands, this is more advanced. You open Bollinger Bands. Right now it's on default, second deviation with the 20 SMA inside, right? Time frame on the chart, no offset. And so, the colors that you can use whatever colors you want, but if you kind of move this around, like if you play around with it, let's go third deviation. That poked out, right? Fourth deviation, it might not poke out of there, but that's a little like advanced trick for Bollinger Bands, just to kind of study like how extreme is this move on a daily, and it can help. Let's go to Binance. Let's go to Solana. All right, Solana, I'm going to go faster here. So there are on the daily some MACD histogram bullish momentum that's going on, but you can see there's still plenty of room for this thing to pull down to 1763. The top side target is $26 on Solana, consolidating to the right sideways. Cardano, decent play. There are MACD histogram, and it is at the bottom support. So, just by support definition play, it has to break out of this trend line. This is when we know Cardano is making a breakout. Cardano is making a breakout when it breaks out of 30 cents. So it needs to hold above 24, 25 cents, get into this area, right? There is a little bit of momentum. I see it. I could see that happening. So interesting play potential here. What's the risk to reward? The first or second immediate candle is like 8% to the downside, and then this target is about 20%. So that's a 2.4 reward to risk ratio. And, if I even make this 10%, this educational advice, if I make a 10% stop loss, I could only use 10% of my account. 10% of 10% is 1% total account loss. That's how I manage risk, right? So it's like a 2-to-1 play, right? That's how nobody's going to blow up their account. But whatever somebody does, they need a stop loss. But it's not good to have a stop loss of consistently, negative 50%. Nobody does that, right? Unless you're an investor, because then the target has to be 100% on the upside, and then you can just let it float around. But for beginners, it's not good to do that because 90% loss rate in trading. So that's why. To beware of that. Always managing risk. first. Then so here's a little quick tip. What do I do here? Right? Let me just write out the three, trade management advice, educational advice. So 1 is manage risk, 2 is protect profits, and 3 is protect principal, meaning the original money. I think it's principal like that, right? That's all we're doing here. Manage risk. What does that mean? So if I happen to buy here, managing risk is, well, how much money am I putting at risk on the table into the market? It's like I don't like to use gambling references too much, but if you ever play poker, if you play cards for real money at like a casino or something like that, I do not recommend this at all. But, does somebody take their whole bank account and throw it down on the table every single hand? Like if you play blackjack, are you putting your entire life savings on every single trade? No, that's why. When you go to the grocery store, am I buying everything in the store? No, right? Unless you're Mr. Beast YouTuber, right? But, right? So real people, like real trading that's managed risk properly, it's always the percentage of the account. It's never the full account. There's never all ins unless you're trying to do some kind of like special investing play. But trading is up to 90% losses within 90 days for beginners. That's why I only risk 1% of the total trading account. Now, protecting profits, what does that mean? Okay, well, if you happen to buy in a good spot and it starts going up, like let's pretend I bought at this blue circle. Now, if it starts going up, if I'm a trader, this is not investing. If I'm trading, day trading or swing trading, you have to move your stop loss up. Okay? Because when you get stopped out, you're stopping out into profit. The market will, your exchange will sell it for you if you set the orders correct. If you're in stocks, there's something called OCO orders, one cancel the other, and you can do your buy entry. You can set three orders for one stock or one crypto, depending on your exchange. If your crypto exchange doesn't have it, there are third-party orders out there. A little risky though with the API keys, but I've done it before. It works generally. It's not perfect, but it works. And for crypto, so then you don't have to watch the market all day long, right? You can just kind of set your three orders, and if you're in at a good spot, it's my entry, my stop loss down here, and then my profit target. And as a swing trader, you just wait for it. Right? I don't have to keep checking every 5 seconds. Right? Only thing that really matters is I don't want to get stopped out. And I want to make sure, right? So if this was a very interesting educational XRP, you buy here, it goes up. Okay, what are you going to do? I could sell now in this circle, or if I'm really trying to believe it's going to keep going up, then you leave it alone. And maybe you move your stop loss to break even. So even if it crashed down on you or just above break even, so then you don't lose money at least, right? Some people leave their stop loss here and forget about it for 5 years. Like some people told me their stories, they forget about it for 1 year or 2 years, and the market does that. And there's no point in trading if you're just going to forget about it like that, right? So having the entry, the exit, and the entry, stop loss, and the profit target exit. How do you practice that on TradingView? Come down here. Trading panel, turn on paper trading, then open up the trade panel, and it's all here for you. You're going to buy or sell. You're a buyer. Where's your take profit? On this example, I would type in 71 cents. So at the dollar price, or price here, 0.71. Where's my entry? Let's pretend it's rewinded back here, 37.52 or 37 cents. 37 cents. Where's my take profit up here? 72 cents. Where's my stop loss down here? It would have been, let's say 30 cents. Just keep it around, or 0.29. Let's do 30 for safety. 30, right? How many units am I buying for practice? I'm buying one. Even though this is a very small amount. So maybe somebody could buy 100 or somebody could buy 1,000, right? Whatever your risk is. Okay. And then you have to calculate your own risk reward. How much money, dollars, are you actually willing to lose? If this is, let's pretend it's 10%, right? So now you understand the mindset of a trader. It's not just about, oh my gosh, oh my goodness, this thing is going up. Let me close this. Even having the oh my gosh reaction, that's emotions, right? We don't want to have that. So let's maximize this. I'm gonna turn this off. Just minimize it like that. Okay, having emotional reaction is not good. What am I looking for here? Now I'm kind of rewinding a bit, but I'm looking at the chart setup first. It's all about the charts first instead of emotional watch list reaction. On your phone, you open up Robinhood, you open up this TradingView, you open up stock apps on your phone. All you're seeing is just a number. But what does that mean? The context. Yes, XRP is down negative 0.90% right now. But unless I look at the chart and understand that, oh, actually we had a huge uptrend rally, a big FOMO pump here with a FOMO crash, almost hit down at this low support level of 42 cents, which was a fabulous day trading buy opportunity. This was a fabulous short opportunity up here at 94 cents. And then 42 cents was great for day trading or swing trading for like a couple days. And then take that profit. Get out of there. Walk away a winner. So moving forward for XRP, that was just a long educational segment for anybody who wanted to learn that. Moving forward is I'm more interested in the support levels. This bottom line. I don't care about this top line for buying that much. So yes, if somebody buys this breakout, it was a failed breakout for investing. So unless there's like Bitcoin legalized as money in USA or Europe, then this thing would skyrocket to the moon, right? But it's not happening right now. We have lawsuits. Not doing well, right? So that's just like a 30-minute or a 20-minute nutshell about chart analysis skills, technical analysis, trading, risk management, order management, and connecting that to the paper trading module here on TradingView. Hopefully that helps somebody in the future. It's a detailed process. People say I'm too detailed, but that's why I have a higher win rate. Because I just go down step by step. I've honed down my strategy, my system, like many other traders and analysts over these years. I just stick to that. I just do that. It's not, what I do is not random emotional trading or investing. AVAX as well, similar to Binance, right on this support level, needs to hold above the 1063 level. And if we're going to have a true breakout, it's got to break out above 1587. Okay, it's got to break out above 1587. But I'll be honest with you right now, in the crypto space, there's not that much hype, not that much excitement. There's more FUD, fear, uncertainty, doubt. People got burned in terms of losing a lot of money here. I know I've heard some traders lost a lot of money in the past year trying to chase, whatever setups they're doing. It's unfortunate, but it's the market. Happens to people. DOT, this is good. We have a triple bottom scenario here. You'll know when it's going to break out, when it breaks above this dotted trend line. So there's double bottom there. It's very risky right now. However, what's the upside potential? Like 50 to 100% if it manages to survive. Dogecoin, however, is below the symmetrical triangle. And here's another example. You could use Bollinger Bands, or you could use, just look at the candles. If you're awake on this one day, huge flash crash just like last time. And there is an invisible liquidity level of support there. Looking left, I'll use a gold bar. So, excuse me, if the price does not go up, it needs to pump up into this above the support line, above 6-7 cents. It needs to get out of there. Shiba Inu is in a larger, giant descending triangle. Okay, so I took my profit on Shiba Inu. Exactly what I'm saying is I knew this thing starting to mini uptrend. It's the same thing. I bought it. I longed it. Purchased. Okay, I had a 10% stop loss. Always having this 2 to 1, and then I inched it up, and then as soon as it started to crash back down here, I took my profit, right? So it's not about, sometimes I sell it on the top on the shooting star. I had a different investing plan and trading plan right here. So things change for me. That's why. If it's a failed breakout, I'm out of there. No, thank you. Take my profit and I'll wait for the next setup. So if it ever gets down here to like 651 or below 536, I'm all open to that. Because that's where the real support level is, way down there. Matic as well, temporary double bottom. Watch out for this low at 36 cents. Cosmos, temporary double bottom. Watch out for the low of 581. These are oversold. So as soon as I'm anticipating maybe one more flash crash, maybe, before it tries to attempt a rally. So there might be some swing opportunities here near as well, getting close to a level of liquidity support down here. The dollar level would be at this mark, yellow mark, and see if that's going to hold or not. Litecoin, unfortunately, this is what happens. Rising wedge, fake out, breakout, meltdown. This was actually the happening was here in early August. So I know this is support. I know this is resistance. This should not be going down. It needs to hold this level of $82. If it doesn't hold, crash. And the bears know that. It's been downtrending, yep, and then we're losing support. You bet millions of dollars are going to sell that off. So then for me, I took my profit on Litecoin. I'm out of there for now. Now, next trade I'm thinking about on Litecoin. Okay, hit the 786 to 618. Doing this. If it comes back down to 768 or even 0.88, it might re-enter at these two levels. This is my zone of liquidity that I like. Tron, interestingly, Tron is still maintaining a higher low pattern, surviving here. So some coins actually, they don't crash as much as other coins. I should say that more clearly. Some coins are uptrending, some coins are downtrending. Bitcoin Cash here, we had this huge upside down head and shoulders. This was my best winning swing trade. Because you had this huge rally, took my profit and consolidated back down to where? Consolidated back down to 618. Now, that's good. Let me rewind this back to the ultimate high here. Pull this back down. So it's just a relative 0.88. The ultimate investing target, if Bitcoin Cash survives, I hope this is a higher low and we blast back off the $693 or $600 Bitcoin Cash if Bitcoin goes up. So that's why I'm not. This could be a huge consolidation play, like oversold, double momentum. We're about to break out to the upside in about 1 or 2 weeks, maybe. But at the same time, I'm being a little bit more cautious because of lawsuits right now. A little bit more cautious. I still believe in it. It's possible. Ethereum Classic bouncing off that level of support above 1378. Needs to hold that. See if we can break out above 20. Algo, at least on this chart, on the Binance USDT chart, Algo is the cheapest price of all time. Cheap can always go lower. Cheap can always go lower. But if somebody was forcing me to buy this, where would I buy? Where would I buy at A, B, C, or D? I would buy at B. I would buy at D. There's risk, but at least the crash, the initial 96% negative crash is over. So now it's a matter of Algo, will it survive the company and the SEC lawsuit? But at least it's down here. Stellar had a nice pump. It's very similar to Bitcoin Cash, and that it retraced. This retraced back down to the level of this parallel channel support. So this needs to hold above 12 cents. It definitely needs to hold so we can get continuation to the upside, and then I might enter my second trade on that. V-chain trying to make a higher low inside of this descending triangle type of pattern. Holding that support. Definitely needs to hold that support above 1500. Mana, double bottom area. And keep in mind, double bottom does not always mean it's going to go up. It's a maybe right now. If it continues to crash down, low high like this, we'll see this, right? Lower low area. And watch out for that. Filecoin as well. Still in the downtrend. This is not the greatest of coins. You can see. So I want to explain to people for the last couple minutes here is if something's downtrending like this, honestly, why would I buy it if I'm along? Honestly, somebody could say, well, it's a good project or good functions in crypto or nice white paper or nice staff, right? Or there's just a lot of hype on social media. But then when the chart looks like that, downtrending, and I don't see there could be an upside down head and shoulders slanted, but it's not 100% yet. I'm not buying this. Only reason I would buy this is if it goes extreme price. It's $3. This could go down to like 3 cents. It's crypto. So that's why I want to see something better on the charts. Better chart, better project. And I'm not picking on Filecoin. It's just happened to just come across my mind right now. Waves, like at least these other ones, you can see they're kind of flatlining, go sideways. At least that's okay. What I really want to see in crypto is this purple parabola uptrend. We need this in the market. We have not had this for 3 years. That's why I'm not excited right now about a lot of cryptos. There's a maybe potential we're going to moon, or maybe there we're going to uptrend, but we haven't seen this yet. Now, I don't want to make this doomsday live stream, so I'm going to end here. For many stocks in crypto, at least going sideways is okay. At least we stop dropping and we're not in a downward spiral towards zero. At least it's going sideways. Okay. At least it's had support. Okay, great. But now we need to see the buyers come in and start to buy these cryptos, or the news change, Bitcoin go up trend for the altcoins to follow. So let's just end it there. Okay, I don't need to look at all of these. They're very similar. So Bitcoin summary, we need this support to hold about 25,000, at least 20,000. And then we need to continue this uptrend either this way, consolidate here, so it's okay. Uptrending is okay as well. We do not want to see downtrend unless you're a bear. All right, everybody. I don't see any questions or anything like that. So thank you so much for watching. If you like my stream, if you learned something, if you just want to support the channel, go ahead and click follow on TradingView, YouTube, Twitch, or Twitter X. It's always appreciated to keep the live streams going and keep the ideas flowing every week. Thank you for watching. Hope you have a nice one, and I'll see you next weekend stream. Happy trading. Goodbye.